Good morning. Hi, I'm David Combe with the CBS AM Debrief. This Tuesday, the 1st of March 2011. Overnight market action saw the US move up quite strongly, and in fact we've now completed a third consecutive month of gains. And given that we've had some other bumps along this road here, it's almost surprising to be saying that here this morning. Most of this was on the back of fairly positive economic news and merger and acquisition activity that's encouraged buyers back into the market. So just take a quick look at those numbers that came through that I think might have been helping things along. We had pending home sales, which suggests that perhaps some of this sale of the foreclosure of homes in the US is starting to dwindle a bit, and we're not seeing all these distressed sales. So some of those numbers down just a little bit more, so I think that might have been perceived to be fairly positive there. US personal spending for January, not a great number there, but seemed to be overshadowed by some of that other data. So let's go through and have a look at the actual figures. The Dow up 95 points, up to 0.79%. The S&P 500 up 7.34, and the Nasdaq up 1.22 points, just 0.04%. The rest of the Americas were up, and then over in Europe, really only the FTSE was the declining market there, down 0.12%. Everything else up reasonably well, with Germany up the most, CAC up 0.98. Yesterday, of course, we had a trade shortened day because of that technical glitch where the ASX were unable to send out the trade confirmations to some of the brokers. We're not sure how that will play out this morning. Apparently they will inform the market prior to 10 o'clock. So that was around 2:30 p.m. yesterday, and that was saw the market just starting to recover there, down 6. Hang Seng up strongest of all, 1.42, and Nikkei up rather 0.92. Let's take a look at what the futures are suggesting this morning. We did have the futures session open here locally, and that's up 20 points to 4,846. Hang Seng pointing up really strongly here, up 401 points to 23,298. Yep, and then Nikkei up 50. Moving out to have a look at the commodities. Excuse me. Natural gas up 0.67%. So starting to hopefully grind our way high here for everyone that's holding the natural gas warrants. We're heading in the right direction, so we'll be a little bit slower than I'd like, but direction is the main thing. Crude 96.90, so off 98 cents, down 1%. So it's starting to see some of that, perhaps some of that risk and fear out of the Middle East and North African situations that start to come out of that price there. The rest of the commodities looks to be mostly up. Orange juice down 3.11. Nothing too major there apart from cotton. I think that was almost another limit up move there, 3.8%. So continuing to be a challenge to trade that one. And then down to copper for $4, just shy of $4.50, up 4.3 cents, and gold at $1,412, up $2.70. Silver at $33.78.5. That's actually back up near the all-time highs there for silver once again. Currency pairs: the euro is buying 1.3803 US dollars, pound was buying 1.6258 US dollars, US dollar is buying 81.7747 yen, and the Aussie is buying 1.0184 US dollars. US dollar is buying 0.9715 Canadian dollars and 0.9290 Swiss francs. Right, let's have a look at the rest of these economic numbers here. The Canadian figures here for GDP for Q4 about 10 plus% higher than expected, with 3.3 versus 2.9 the expectation and 1.8 the previous. So that's pretty good for Canada there. And just looking back over at this Canadian currency pair here, it looks like yeah, that has supported the Canadian dollar. GDP month on month, yep, better than expected, 0.5% versus 0.3, and year on year 3.2 versus 6.8. We've had that US data there that I just mentioned. We've actually got a huge amount of data here today. Some household spending out of Japan, current account balance locally, producer manufacturers index manufacturing out of China, RBA decision, first Tuesday of the month, so we would expect that. GDP for China, and UK data, just keeps on going on and on and on. Employment data out of Germany, money supply, mortgage approvals, and through to this evening, Eurozone CPI estimate for February, and unemployment rate across the Eurozone for January. That about rounds out the data for today, so plenty to look out for here. Just move through and take a look now at some of the stuff going on in the Falcon Trader, and just take a quick look at the gas here if we can find it, or maybe grab the first thing that comes to hand, copper. And I think that I didn't actually see Jono's AM Debrief or week ahead report yesterday, but I know that he was quite keen to be looking at picking up copper around this 420 level. So that was yesterday there we had that confirmation that we had a reversal there. It's probably getting away from us a little bit here, so we've looked for really any opportunity on a dip to back down towards this 420 level to hopefully accumulate there and buy copper. We have, of course, the structural supply deficit and inventory drawdown that suggests that there's really only one way that that can go. Would be a reasonable conclusion. Okay, a couple of other things to look at here. St. Barbara is one that I've talked about a couple of times, I think last week. Kind of failing to go anywhere at this point. A little bit of support from gold price though should hopefully see that start to break out a little bit higher here. Got a bit of a pennant pattern here that if we see a break on, could be a could be a breakout. So really it could go either way, but keep an eye on that one. Just a quick follow-up on Medusa. There's another one in the gold space that I like. Just seems to be doing a little bit of work here around this $7 level, and consolidating here perhaps a little bit before hopefully then moving a little bit higher and maybe going up and retesting this level up around 780. Okay, we've got got a natural gas here, and just getting this rounding out pattern at the bottom here. If we scrunch this up a bit, we can see that we've had this as a level of support around this time last year before it started to move higher. Now we have got until June for the warrant to reach its expiry. So if we see a repeat of that, we could actually be cutting it fairly close to the wire here if we get a repeat. And that's the big if. So certainly a bit of a different situation economically to last year. So fingers crossed on that moving up quite quickly here for the natural gas warrant holders. Okay, I think just about wrap it up there. So as always, thanks very much for your attention. Hope that's worthwhile. Until next time, bye for now.